session with the one and only me. That's exactly what we're on today. And first of all, let me start today's stream by saying I am myth actually. I am not completely happy today, but whatever. I promise to make these streams and we're actually going to make efforts in the trading sphere. But I wasn't really happy with the outcome of yesterday's trade. Like I said, I was going to let it run. And then I said I was going to sleep, but I was joking. But then I actually went to sleep, guys, and it actually had negative consequences for my trade. But we're going to look into that. But before that, give me a few seconds. Let me make some things. Okay, okay. Had to work out some kinks before we resume with the live training session. So, like I said, there were some mistakes made on my part, honestly, and that actually got me thinking. Throughout the whole streaming sessions I've been doing, we have not actually looked at something that every trader should actually implement whenever they're trading tokens like MEA or any other token in the crypto space. And that is stop loss, guys. Don't be like me because I'm about to show you something that happened yesterday and it does not say much about me in a good way as a trader. And I am quite disappointed with myself. But it's fine. It's fine. These things happen. Even better now that I'm supposed to actually be sharing info to you guys so you don't make the same mistakes in future. So that being said, let's look at my point of shame. Very transparent. I always show up. I always show what's happening. And guys, it was crazy. It was crazy. Like I don't know if you've seen the chats. It was crazy last night. Like I just woke up right now and I hit SL. I hit my stop loss, but my stop loss was so damn wide. I was not even eyeballing the trade. But before any other thing, I'm going to place a buy now. I will explain why. But I'll place a buy now and explain during the stream because I don't want the opportunity to place that trade to go yet. So that was that. Now back to yesterday, guys. Yesterday was quite a heck of a day for me. I still feel embarrassed, frankly, because in all my years of trading, all my months of trading, to be exact, a mistake like this doesn't really occur unless you are unserious with the trading and of itself. And I was pretty unserious with the trade. That's just it there. Because yesterday, if you guys remember, we did our analysis on this spot here, and we came to the conclusion that there is a support zone already formed, sitting pretty like right here, and that was why we placed that buy. And now it sort of went against us during the night because you can see there was this playing around, moving around with liquidity before a massive push to the downside, which ended up taking us out of the trade. And that is my bad actually, because we should have been able to push a bigger gap on the trade, but we really didn't. We didn't actually take time to implement it. And I don't really see, okay, I think someone drops, okay, sorry. Yeah, I don't really see a reason for placing a sell again. Yesterday, this new low was not something that I had planned for. I don't think it's something anyone had planned for, and we'll find out when we go to the group chats because I don't know whether anyone also placed a trade yesterday. But personally, guys, it's my bad. Okay, this sort of thing that should not have happened if I had actually been awake and eyeballed this trade. Because after seeing this whole rigmarole and playing around, I would have been like, the market is so unstable and it's trying to make up its mind, and I don't want to be there. I never want to be there when the market is trying to make up its mind because at the end of the day, you get screwed over, honestly. This is an accumulation in Forex or any form of trading. This is called an accumulation phase. And what happens after an accumulation phase is usually unpredictable. And right now, it did not go my way. So that's what happened to our trade yesterday. But have no fear. I got you. We're still going to get back on the trade today. And I have a feeling that we're going to get our losses back. If you want to ask how many percentage or how much I lost, don't worry about it. Just know that it was very substantial, enough to make me change my ways, honestly. So today we're going to implement something a little bit different in our trades. Before that, I promise you guys I will explain one of the most important tools for taking trades in the forex market, be it whatever time frame that you're operating under. And this is it, guys. When you're placing a trade on any time frame, okay, I think I should work on something. Sorry, guys, I have to take care of something behind the scenes. But like I was saying, whenever you're placing a trade on a token like MEA, you should actually have a tight or okay stop loss or take profit. It's never okay to place your trade without a take profit or stop loss. But the reason I do in our streams is that personally, I don't really. I think someone is dropping few messages for us here. Okay, the chat. Anyway, like I'm saying, I don't really concern myself with those sort of things because I eyeball my trades during our live streams. But yesterday, like I said, I promised to eyeball it, and after some time looking at the market playing around all the way up to here, I was like, "What am I watching? I'm so tired. Let me just stop." But then it actually hit my stop loss and took me out of the trade later on. But it would not have hit my stop loss if I had observed all of these playing and rigmaroling. What it means in essence is that the market is not sure of where to go. And when the market is not sure of where to go, you're completely at the market miss. You're no longer trading at that point, it's gambling. But now, onto this buy, if you notice, once the stream started today, I hurried up and placed a buy. Why, you might ask? Because of the strategy I'm trying to teach today, trading on a general market scheme. You see, the MEA token is a token that has a pretty stable market cap, only with small, shocking price movements here and there that can be easily hinged upon to make one or two profits here and there. But now, the beauty of the MEA token and any token in and of itself, a token that respects price structure, is that this indicator, that is this particular one that I have on the chart right now, is called the Bollinger Band. You see, I turned it off and you see what the candle looks like when this indicator is not in move, it's not in motion. It's called the Bollinger Band, and this is what it looks like when it's not working. Okay, when you activate the Bollinger Band, it appears, like I explained yesterday, it's made up of three bands: the upper, the middle, and the lower band. And the reason I placed this by today is because in status quo, whenever price moves below the lower band, it always seeks to correct itself above and come up. Okay, and that's what I'm trying to hinge on. That is why I didn't really teach before I entered the trade. I entered the trade immediately, so that I will set up sort of get a sniper entry because my feelings are hot right now. I feel like whenever I lose from the market, I should try to get it back. That is not a good psychology, guys. I'm just doing it because of my bruised ego. I refuse to agree to a loss like this because it was caused because of my lack of foresight or oversight, depending on how you think. So today's buy is being placed mainly because whenever the price moves away from the Bollinger Band or inside the Bollinger Band, there's always a slight correction. In the event that it fails, if you're eyeballing the trade, you will know that the trade is about to fail. Because if you watch here, and this part of the trade, see that price closed outside the Bollinger Band, right here. The price I'm indicating closed outside the Bollinger Band, and it started to make its move back to the upside to actually mitigate this oversold region. But then the result of the failure of the signal was this whole ranging here. This ranging is literally the market telling you that there should be an increase in the upside, but the forces of bear, the bear pressure is so high. So it's actually trying to push down the trade and order. So that is literally what it means, guys. And that is how the trading here works in our world. So on a comparative level, if you're trading and you see the Bollinger Band like this, you should not just trade based off on it. I not just trade based on the Bollinger Band. I was explaining in depthly why we took the trade today in this live, or in the live that I bring up later to analyze this trade after placing it. You see, the Bollinger Band is an indicator, and personally, I don't really like using indicators to trade, especially when we're dealing with tokens like MEA. Indicators are not sure or plugs. They're not sure signals to trade. Doesn't really mean you will make profit for sure or loss for sure. An indicator should be used in cognizance with your fundamentals. So if you're using your indicators, you also add it to other things. It's better to use indicators to confirm strategies rather than just enter trades like that. Honestly, like I think it's pretty way to enter a trade just like that. And I know it looks like that, but I didn't really enter that trade based on trade levels or like that. So there are other things I actually took into cognizance. But then yesterday, I took you guys on some other crazy things, indicators. We looked at the MACD, the volume, and other things. But now today's indicator for trading MEA, another one I'm going to drop, is a very important indicator, very, very simple for newbies. And this indicator is known as the RSI. Now you see, the RSI is not an ordinary indicator. It's a very, very simple indicator for three reasons. First of all, the data is very easy to read. Secondly, the RSI is very, very clear. And third is the nature of the RSI in and of itself. The RSI does two things. It shows you overbought and oversold. Every token and every chart, every price chart has an area where it is overbought or oversold. When a token is overbought, it seeks to actually mitigate their overbuying by coming back into the profit zone. When it's oversold, it seeks to mitigate the overselling by coming back into the buying zone. That's essentially the Bollinger Band, but with extra steps. You see, the reason why this happens is basically, I think it's more of a natural thing, okay? Like price always seeks balance. Whenever something, a big move like this happens, there's always a sort of mitigation because this is not a synthetic index. This is a market that is pushed by demand structure, okay? And a market that is pushed by demand structure respects demand and supply. That is why you see structural candles forming. You don't just see tokens moving, candles moving without respect or price action. There is always a reason for every move, especially with a token that MEA. And that being said, if you're watching this stream and you don't know what MEA is, MEA is the official token for MECA. MECA, in this case, is a Solana-based project that aims to unite different digital assets under the same banner: webtoons, video gaming, and other things. Essentially, MECA is this one fix to all problem project that has chosen MEA or has created MEA to be a central token or currency for everything that they are planning for in their ecosystem. And basically, they provide utility for the token that they create. So essentially, when you're using MECA, you're paying for MECA's products, let's just say you can pay for MECA's products with MEA. And MECA in turn incentivizes your purchases by granting you some MEA rewards and order. You can also stake MEA. I think staking is also available. It's a relatively new token, and you can stake it and earn amazing rewards. In addition to the fact that price mitigation is also going to increase your rewards. So that being said, that is a breakdown of it. If you want to know more about the MEA project and MECA as a whole, then you can check out their socials, link in my description, learn about them, do your own research, maybe get yourself a bag or two, honestly. It doesn't hurt. Okay, guys, I'm going to have to take a second and check on something. Okay, guys, so I actually paused so I could take a look at what our members, or should I say, our fellow MEA enthusiasts are thinking in the group chat. Like, another thing I like about MECA as a whole is how there's always inclusivity. I have this guy I was talking to yesterday, and I think honestly, he actually impressed me with everything. His trading yesterday was really, really cool. I was looking for him. I don't know if he's around. Yeah, boy alone. Oh, damn, he's always online. This guy always times my. I think he's timing my streams. You know, he promised us he was going to come on live today, but I don't know if he's going to be available. Damn. Boy alone. Let's see if he's around. I'm almost to. I don't feel proud of my trade, so I don't think I'm going to mention trading to him right now. See, that's okay. Personally, guys, I feel like if we're going to be trading here, one of these days, I'm personally going to look into getting a short position because we have been going long all this time, and it's really, 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 it's in bad taste to keep on going long. That means there's nothing else we can do. Is that what it means? No, of course not. So we're actually going to look into placing short orders later on today. But one main reason we're not placing a short order right now is that this is a huge move. Momentum based is a huge move, and I always try to catch a correction, but then I don't think that correction is going to come this time around because if you observe the last two big moves we have had, the correction didn't really give much in way of profit. We caught it here. If you notice, I saw a big move and I entered the buy and I actually closed right here. So we sort of broke even, no profit, no loss. But then that really didn't all go well with us because in our second trade, right over here, I caught the big move right at the bottom. And a correction did happen in my favor. But then at some point, a sell actually took us out of the trade because you notice that we entered the trade here and I was planning on a TP all the way up to. And that was actually supposed to happen. But instead, now we're having a ranging market. So the odds are high that this trade is going to all go the same way, we're going to work out the same way. But because I've placed a buy, we're going to watch how it works out. Because if price moves directly in favor of my trade, then this buy is going to actually get us some profits, closing the early morning. So, we have something to smile about. But if price does not move in my favor, I expect it to range a bit. And during that ranging, we'll not have to make a hard decision whether or not we should close the trade, whether we should let it run and all that. So we're actually going to see how it works out. Uh, on a comparative level, I think Mia's price action is much more predictable than other tokens, honestly. I mean, fine, I've taken some heavy hits this morning on the price action level, but that was only because I wasn't paying attention. And if I were, I would have been able to actually see this coming and actually close this trade or open a counter sell. But now I'm here, okay. And even after closing the stream, when we're done, I will still be watching the chat to make sure that something like this doesn't happen again. I know. I'm sounding like a politician now, promising things that we're not sure will happen. But let's just see how it works out, guys. So back to the trading. I promised to show us how to use indicators for those that do not understand trading. Sometimes trading doesn't is not rocket science, honestly. Like it's not rocket science. Sometimes it's something that you can just come up with and do based on what you are seeing. Indicators are a very easy way to trade, especially if you don't know what you're doing. All you have to do is learn a few strategies and add it to your indicators, and voila, you have something perfect on a very, very clear time scale. And the beauty about trading is that if you learn how to trade on one token like MEA, you can easily trade the same strategy on any other token. But right now we're using MEA because, like I said, it's my favorite token to trade most of the time. So first thing to do if you're trading, let's look at the list of. Also, I forgot to add, there are a lot of indicators in the marketplace. Like there are a lot, there are a lot. But what exchanges do, like BingX and Bybit and other, what they do is to provide the most essentials. Doesn't mean that other exchanges are not important. Other indicators are not important. What it means is that they provide essentials. I mean, even people are allowed to create their own indicators. They are called custom indicators. But in the market, basically, there are a lot of indicators, natural indicators that people use. But these ones you're seeing here at the bottom of the chart, let me put them up again. I don't know. Yeah, this one you're seeing at the bottom of the chart are the most low normal ones, the ones that every trader should know, and the ones every trader uses. So we're going to take them one by one, and I'll show you how you can use them to enter trades on the MEA platform. The first one is the one at the bottom, the MA. You see, I clicked it. That's why it's black. The MA refers to the moving average to hold those that don't actually trade here. The MA is like the Bollinger Band, like that I used in the beginning of this, except the Bollinger Band is literally the MA compressed in the middle. I don't know. I think this is going to go over a lot of your heads and it's going to be confusing. So let me rephrase it. The Bollinger Band has three lines, if you remember. It has a line that is in the middle, an upper band, and a lower band. But in this case, the lower band is literally the MA compressed into one single line. But now, this MA means moving average, and it's a series of graphs that are plotted using the current position of the candlestick charts. One thing you guys should know is that indicators are usually retrospective. They are retrospective in that they give you past data. There is no indicator that can boast of giving you future data accurately. What indicators do is to show you a clear representation of what has happened in the past, so you can now come up with a sensible way to predict the future. I know it's crazy, but that's exactly how trading works. Trading is literally you using past results try to predict the future. That's what Fibonacci is. That's what time scaling is. All of that. It's literally you using past information to try to decide what will happen in the future. And the MEA does that best. Now, how does the MEA work and how can I use it to enter trades? Now, like you see in the MEA, there are three lines: a purple line, a blue line, and is that yellow? I think that's yellow. Yeah, and the yellow line. These colors can differ in different charts and different exchanges, but they're usually the same. There's always three lines. Now, whenever price moves below all three lines, it is always an indication that the bears have taken over massively. So you can expect one of two things. Some people try to enter a buy method so that the price can remitigate back to the upper line. And this is a problem because for me personally, I don't enter trades just solely on that. If you're going to enter a buy after a massive sell just because the MEA price has gone below the MEA, then you're not really trading. You're just going through the motions. It's almost like you're trading like a robot, and that can be quite problematic for you. How something like this should work if you're using the MEA is that whenever the sell is massive, like in a case like this, and you see the MEA, and you want to enter a buy or a sell, you shouldn't really trade like that. What you should do is to wait and observe. Because just like the Bollinger Band, the MEA is an indicator that actually strives to get a retracement or a retouch, a reduction in the market. And what usually happens in normal cases is that whenever there is a push downwards, price always tries to go back and touch a line in the MEA, whether it's the lower line, the middle line, or the upper line. That is where a trader should take his trades. If price has moved against you massively, the only time you should take a trade, whether it's against you or in your favor, is when price goes back and touches the MEA. Any line is okay, but it's usually best if it touches all three lines at once. What happens there is that those lines help you form a new support zone. Take this for example. This is a scenario where price moved massively below the MEA. All three lines, they passed it. Now, a trader at this point would have been like, oh, this is wonderful. Why don't I place a sell or a buy here? Which might have been okay. You might have got a small buy here. I don't know what I would have done for you. But then, what you should have done is to wait until price touched the MEA right at this spot. And what happened? Value crash out. Essentially, a crash out there. Like, you can't argue with that. This is the classic example of retouch in the market. And whenever there is a retouch in the market, you always see a reduction in price or an increase in price. That's it for the MEA, guys. I might drop a better video on how to use the MEA for those that didn't understand this. Or if you have a question, you can drop anything in the comment section. I will answer now or I'll answer when I'm done. The second indicator here is the EMA. The EMA stands for exponential moving average. Now, most indicators in Forex or crypto all strive or believe, or should I say, they work on the mindset of the moving average. The moving average is a very simple indicator. It is the best of a lot of other indicators. Exponential moving average, awesome oscillator, EMA, all those things. What else? Bollinger Bands. They all implement the moving average. Even the MACD. They all implement the moving average because at its core, the moving average is a baseline for a lot of indicators. Okay, but now the exponential moving average is more of the MEA on steroids. But the clear difference here, if you're on the comment section, then you can see that the differences are clear here. You can notice that instead of three lines, there are only two lines in the exponential moving average. Now, the exponential moving average is there for people that don't really like noise. If you're like me and you don't like seeing noise on your charts, seeing all these massive indicators, all these lines, if it makes you confused, all you have to do is use something that simple like this. Instead of using three lines, you use two. It still works the same way as the MEA I explained, but in this case, it's now two. So if you're trading a token like MEA, you should actually use this kind of setup to actually trade it. That being said, let's ask our members in the group chat what kind of indicators they usually prefer. Who knows? Somebody might drop something. Theodore says he's going long, definitely. I'm also going long, Theodore, if that means anything to you. Sure, if you can share an update on that. So that's it for the EMA, guys. There's still time, and I want to move into another indicator, get a lot done today if possible, so we can move into something much more substantial and, should I say, juicy in our next stream instead of having to explain this. If you feel like I'm not doing a good job explaining these indicators to you, you can always use Google and actually get more insight on this, or even YouTube right now. You can get a better short form, long form video. I think I'll make a long form video later on how to use these indicators if you subscribe and like, so you can actually see something like this. So smash that subscribe button, smash the like button so that you guys can actually take part in learning more about trading, not just on the MEA scale, on every other scale, because something that's really important. The same way you breathe is the same way you should learn how to trade in the 21st century. It's a skill that everyone should have access to. That being said, that's it for the EMA. The second one, the third one, is the Bollinger Band. I don't know if I should still explain the Bollinger Band because that's literally the first thing I explained in this video, but let me wrap it up very, very quickly. The Bollinger Band is made up of a moving average in the center, an upper band, and a lower band. Now, the same way the moving average works, not the way the Bollinger Band works. Instead of trading based on bounces and supports, the Bollinger Band works on the basis of, how do I say, a price correction. If price moves outside the Bollinger Band, there's always a correction to the downside. If price moves below the Bollinger Band, there's always a correction to the upside. Let me explain with the charts. Watch here, guys. What do you see here? Price moves below the Bollinger Band, below all three lines, and what happened? A correction to the upside. During that correction, price moved above the Bollinger Band, and what happened? A correction to the downside. Again, price moved below the Bollinger Band, and what happens? A correction to the upside. This is what it looks like on paper. But then these indicators it's always important to use them in conjunction with other methods of price action, so you can actually confirm it generally. That's it for the Bollinger Band. The second indicator I want to touch here is the volumes indicator. The volumes indicator is very, very important in one respect. Literally, the name is literally there in the name. The volumes indicator is very important in identifying and telling volume. Volume in trading doesn't really mean you should buy or sell. What volume in trading means is that people are actively in the market. It is problematic when you're trading a token like MEA and there is no movement. It can be quite sad because that's what happened yesterday. This is literally because there was so much lack of volume in the market on surety, and then like 15 minutes ago, someone somewhere sold. Now, in the market generally, it's usually a problem, but you can actually tell using the volume indicator whether a candle move is a fake out move or an actual massive volume move. Now, look at this. If you're observing, the volume indicator has been at the same level all this time, and then all of a sudden, it spiked right here. Now, what does this place have in common? What it has in common is that it aligns with the candle up here, showing you that there was volume in the market recently, a huge push, which means the bears are in control right now. And yet, I'm still taking a buy because honestly, I haven't had enough. I know the hell what that is it. So that's it for the volume indicator. If you don't understand it, you can drop questions in the comment section and I will attend to them. The next indicator here is the MACD. The MACD means the moving average convergence divergence. Like I said, a lot of indicators in the forex market or crypto market, they all stem from the moving average in some quantity. The moving average is the best parent of a lot of indicators, and it's very, very good at telling support and resistance. That is what most people use the MACD for. The beauty of indicators is that people don't really use them for the reasons they were made. A trader can decide to look at the MACD and decide he wants to use it as a confirmation. Another person uses it as an indicator that tells him exactly when to buy and sell. Someone else uses it as an indicator that lets him know that there are buyers and sellers in the market. People use indicators for different things. The idea here is to know what works for you as a trader and actually observe the charts so that you know what you are doing. Now, the MACD, if you notice, doesn't actually appear on the chart. It appears as its own personal chart on the bottom here. What the MACD plots is, like I said, convergence and divergence. I will be taking convergence and divergence in our next stream, so you should actually stay tuned. Drop a like, drop a follow. It's going to be actually beneficial to you, because another way to trade without indicators or in conjunction with indicators is known as the convergence and divergence strategy, which I'll be bringing up next. And it's very, very important if you're going to trade a token like MEA and actually be in profit. So that's it for what the MACD does there. A moving average that shows you convergence and divergence. If you want to know what it is, you can research it or wait for our next stream. There always has to be something. I can't give you guys all the info at once. There actually has to be something that makes you come back. Because honestly, I want to see you guys again. The next indicator here, and the most important one, personally, my favorite, is the RSI. The RSI is an indicator that actually shows volume, more or less. It's very important that you notice that these indicators sound or do almost the same thing, but they are not the same in and of itself. The RSI stands for Relative Strength Index. It shows you exactly how much strength is going into buying or selling. What volume tells you is that there are people in the market. The RSI tells you to the extent these people have taken the market. Right now, if you notice here, without telling you, you can see that the bears have taken control of the market in a massive way. And the RSI reflects that by going so way below to show you that the sellers are not just in control of the market, they have actively taken over. And what happens with the RSI? Normally, in a chart like Meta 5 or Meta 4, the RSI has two settings, a level 75 upward and a level 35 downward. Basically, it's like the Bollinger Band, but on steroids. That is why if you should use the RSI in conjunction with the Bollinger Band, you always get a stronger signal. In our next stream, I'll show you guys how to use indicators in conjunction with each other to actually trade MEA. And that's actually what we're going to do. But today's trade was based off of price action and the Bollinger Band. So our next trade will be based on a conjunction of indicators for those that do not actually know how to trade. And for those who know how to trade, come on, drop something in the comment. Tell me if I'm doing it right. If you think I'm not doing it right, tell us how to do it right in the comments. I'm not a hater. I would like to listen to what you guys have to say. So that's it for the RSI. I'll actually pour more light on it because that was actually the last thing I mentioned there, and I don't think I did a good job on it. So that's it for today's stream, guys. We'll actually have another one later today where we see how this trade worked out. And that's it, guys. That's it. Any questions, drop it on the comment section. It was glad to